Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, August 26th, 2021. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. The first thing you'll notice is how narrow the last 2 days has been, or have been, and then plus today, that is now a developing 3-day narrow range. You can see down here how narrow it is. Just 21.75 points of total range over the last 3 sessions developing. That's 26% of average. Super narrow. The last time we saw something that narrow was right in here. And you can see how price eventually saw further expansion to the upside out of that 3-day narrow range with an increase of volatility. You'll also notice back here as well we had another very narrow 3-day range here, narrow 3-day range here, but each time for the most part things have continued to trade to the upside, especially after a significant multi-day pullback like what we've seen. So again, today may turn into a 3-day narrow range by the end of the day. It's already developing that way. We may see another one here develop heading into Friday's market. We do have Fed Chair Powell speaking tomorrow morning, 9 a.m. Central Time, Friday morning, so that could present a little bit more volatility here, but for the most part everything continues to melt up until proven otherwise. Even if we were to see some sort of big flush event, it could turn into some sort of higher low, failed new low, and a continuation up. Based on this key range right here, we still have the next upside target here at 45.45. So the expectation is that we continue higher toward that target heading into the new month of trading. All right, let's take a look now at the NQ. You'll see right here the NQ also developing a very narrow 3-day range. So on a developing basis, super narrow, 29% of average range, just 101.5 points of range. You can see there was a time right here where we had a super narrow range and eventually got the breakout. Notice what happens when a breakout does occur. This could happen tomorrow, for example. You get a stop run day up, so price pushes up through the top of the 2 or 3 day range and then continues to see expansion, the expansion of which usually is 100% or at least equal to what was below the breakout point. So we could be looking at a stop run day up scenario here. Any pullback early on, say a retest of 15.2, could still trigger a continuation up. So right now, still looking very strong despite the very narrow range. Again, when you have a narrow range over the last 1, 2, 3 sessions for the ES and the NQ like you do for the YM, you definitely want to avoid the chop and look to fade new highs, new lows with an upward bias. All right, taking a look here at crude oil. Now, crude oil down about 1% right now. This one inside day at the moment. It has rallied tremendously. One thing we've talked about is a couple of things. The ability to get back above the key range low, the ability to get back above that 66 level, that's really solid. A pullback into that zone could provide a bounce and a continuation higher. Now, one thing to watch closely here as a failure point is this key range high right there. And that's basically 67.98. It's 68 evens if you want to call it that. And since that high, we've seen lower highs time and time again. Are we about to see some sort of rejection there that leads us to a new low within this downward sloping channel? That would put us right into the previous quarter's low here of about 58. So this is a zone here where if we're going to fail back down, it would probably occur against that 68 level. And then we have that downward or that lower market structure below 68. So that's something to keep an eye on. As of right now, we've had a tremendous rally the last couple of days here. Inside day holding here. So still given the benefit of the doubt to the current short-term swing move for continuation higher until we see major rejection. All right, let's take a look lastly at gold futures. This one down about 0.4%, has pulled back from the recent highs above 1800. We're not quite back to 1760. We're trading 1780 right now, but a pullback as deep as 1760 could provide a bounce back up toward 1840 We're currently on the pullback phase at the moment. Weren't able to hold the breakout point here, so a little bit more to the downside could be seen ahead. Once that occurs, we could turn this thing back around. So again, the idea is to hold 1760 for a push back toward 1835 to 1840. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.